everybody? Happy Thursday. Welcome to the Dollar Hour. I am Deonte Burden.
Yo, this is
Sorry, we are live.
Hey, what's going on, everybody? This is the Dollar Hour. I am Deonte Burden, aka Mr. Short Dollar himself. Got a great show tonight. Tonight's show, we're going to be talking about, well, I'm breaking down the difference between the sole proprietorship, C-Corp, S-Corp, LLCs. I get asked these questions so often, knowing I'm an accountant. What's the differences? What's best? What's right? What's wrong? How can I do this? How can I do that? So I finally decided to have a live show. I've had a couple of videos. Hold on 1 second, Lab. Instagram going out for a second. I don't know why I stopped. So I decided to have a video in regards to the subject tonight, the difference. So again, tonight's show, we're talking about the difference with sole proprietor, LLCs, S-Corps, and C-Corp. Before we get started again, I'm Deonte Burden, aka Mr. Short Dollar himself. On the Mr. Short Dollar YouTube channel, we talk about personal finance, entrepreneurship, business, and investing. We have over 400 videos on the YouTube channel covering other topics concerning business finance, business management, business operation. Right now, we're streaming live on Facebook, YouTube, Instagram, TikTok, LinkedIn, and Twitter. Am I doing something? The what's name keep going out?
What's that? The Instagram?
Yeah.
It keep cutting off?
Where's my phone or something?
Oh, it keep closing.
Yeah.
Yeah, you gotta set it to where it won't close.
They've never done that, folks. I'm trying to figure it out. Might be something I'm holding on to.
Yeah, on the side. Is it on the one of them buttons on the side?
Maybe. Bear with me 1 second, everybody.
Yeah, it might be one of them.
We want everybody on the Instagram world to make sure they get in the show. Let me see. Make sure we got everything. With that. We go again. Hopefully.
Okay.
That's good to go.
All right.
Got it.
Okay, you got it.
Got it. Good to go. And
press them buttons.
Push me button.
Let me turn it.
I think my dumb ass hadn't even cut it on. To be totally honest with you. But again, tonight we're talking about sole proprietorship, LLC, C-Corps, S-Corps. I'll explain all the pros and cons of each one of them from a business standpoint, also from the tax advantages of each one of them. So we'll have a lot of discussion with that. Before we get started, Lab just walked around. Want to say what's up to my awesome producers, DJ Lab.
Sorry. I think that other fan was probably messing up some stuff.
Also, my other producer, Slick 316. What's up, Rico? And we're gonna get it cracking, man. But before we get started, I want to rehash my previous week. Big shout out to my boy KT, man. He had his birthday celebration this past weekend. Had a comedy show Friday. Had a pool party Saturday.
Okay.
And then all white yacht party on Sunday.
Okay.
So let's say Mr. Short Dollar had a real good time. What they say? They say thick thighs save lives. And I would never in danger of dying, baby. Oh, we had a good time, man. Real good time. Yeah, big shout out to Keon.
Grown folk stuff.
Oh, man, grown folks and damn food stuff. But also another shout out to my baby boy, William Burden. He just graduated from elementary school. Proud of your baby boy. My youngest son, so he's been good to start middle school next year, but that was a big accomplishment. And, so I'm super proud of Will. My son Christopher finished his junior year. He headed to his senior year. So I'm super proud of all the boys.
You got a lot going on.
Super proud of all of them, man. There's something with the I don't know what it is with the Instagram. But I guess it's just going in and out. But we're gonna keep it rolling. But again, tonight we're discussing the difference between sole proprietorships, S-Corps, C-Corps, and LLCs. And one of the main reasons is because, everyone knows I'm an accountant, and even with the finance channel, people come to me all the time. Hey,
right.
I'm looking for them at LLC or C-Corp, or people come to me. They got all these business ideas. They want to form this umbrella conglomerate, and they are clueless. They know what they want to do inside out. Plumber, electrician, barber, landscaper, music producer, whatever.
Right.
But they don't understand business structure, business law, business entity, taxes, and everything like that. They think they do.
Right.
Once
you start a business, we become super geniuses.
Oh, yeah, exactly. Especially when they get that paperwork.
Right.
But with that said, people approach me all the time. Hey, man, what's the best thing to do? And I think people kind of just they don't want to take enough time to find all this stuff out pre-business because they're so energized and adamant about getting the business started,
right?
Instead of doing some kind of front end analysis to check out their current situation, see if it's going to be a good thing for them or not. And a lot of people miss that. And I wanted to have, because we've had the channel 4 or 5 years. I've done all kind of videos and everything, but I said, look, let me do a whole video where I actually where I go over each one, go over the pros and cons,
right,
and then give you guys some tips in regards to what you should do. Again, because when you turn on the YouTube channel, YouTube, TikTok, any social media, people telling you all the time how to form one, but they'll give you some pros or whatever, but they'll never bring up the situational piece. And that's what we're going to talk about tonight. Because again, a lot of times you rarely will see probably a professional, when I'm talking about an accountant or a business attorney, telling you what to do without having any kind of information to give you advice.
Okay.
That's why I tell people a lot of times, like, you got to be very, very, aware of that. A lot of times people tell you what to do, but a true person is giving some kind of consulting to you. They need to get some kind of background first before they give you a decision. Somebody just tell you what to do without knowing, you're married, divorced, rich, poor, experienced, inexperienced, credit, no credit, time availability. You got to know certain things about a person,
right,
before you just give out advice. But like I said, we ain't no shortage of that.
That's true. We got plenty of advice.
Or especially like on TikTok, you want to start your business, do this, do this, and you'll be all right.
What about this?
Man. Don't know what the hell you doing, man.
Slick say Versus got 8-ball MJG tonight. So it's what's the name? So Instagram gonna be a little fishy.
I thought it was Saturday.
Tonight.
I thought it was Saturday.
Last Saturday?
No, this Saturday coming up.
I don't know.
I thought it was Saturday.
She just said it was tonight. I'm going by what the social media officer says.
No, that's why I was all hyped up about. I thought it was gonna be Saturday. I tuned it in, man. I love balling GA and UGK. But
okay.
Yeah.
Now that's what you just told me. Now, Slick, you might have to check that because Pooja said it's gonna be Saturday.
I thought it was Saturday.
Right.
But I'm thinking now.
But Instagram has been fishy today. Like it was a point. It was at some point today when you logged in there, you try to scroll. You only let you scroll through 10 pictures. So it's been glitchy all day today. To be honest with you.
It's cool. It's cool. We're gonna keep it moving. And but hey guys, one quick housekeeping thing. What platform you on? Facebook, Instagram, TikTok, LinkedIn, Twitter, YouTube. Again, tonight we're talking about sole proprietorship, LLCs, S-Corp, C-Corps. If you have a question or response that's totally out of what we're talking about tonight, please hold it, and I promise you I'll open the flow on book it down one-on-one. Just say it's on right now. I appreciate that.
Okay.
Yeah. Thanks a lot. I appreciate that. So it's on, man. Hell, I'll be damned about to
cut this show now. Catch us next Thursday for that continuation.
But
say hey to your mom.
Hey, what's up, mama?
Shannon Turner.
Hey, what's up, Shannon? And I would say the biggest thing, if you can hold anything outside of what we're talking about tonight to the end of the show, I promise you, I answer any one of your questions. So again, I get asked that question: which one the best one? Which one you think I should do?
Okay.
A lot of times people don't understand that if somebody can give you true consulting with anything, your health, your business, your house, or whatever, you would be weary if somebody give you any kind of advice or consulting. They don't have the background information.
Okay. So
you kind of want to make sure you got somebody actually, and that shows a level of experience also, no matter what it is that they actually looking at stuff.
Right. Right.
They kind of give you a roundabout answer.
Okay.
To give you a good advice rather. And so what I want to do is just go through each one of these guys and just kind of give you a breakdown, some of the pros and cons, and then kind of give you background information, more so the side effects, help you pick with each one. So we start about the sole proprietorship. What's sole proprietorship? Sole proprietorship, just you own the business yourself.
Okay.
You go down to your local business development, business license office, go get your business license.
Okay.
Basically, go get your tax ID, you're a sole proprietor, single owner, right?
Mm-hmm.
Nothing where you're registered with a particular state that you in anything. You just got a business license, operate as sole proprietor. Keep in mind, guys, from state to state, everything varies in terms of how you set up your entity. Being a sole proprietor, LLC, C-Corp, S-Corp, because they're not federal regulated. The only thing that's regulated through the federal system is the tax ID numbers, right? Or the EINs. Those are the only things. So some places you may get your business license from a particular city you live in. Some it may be the county. Some it may be a larger jurisdiction.
Okay.
All right. But that's just the basic sole proprietor. Some of the advantages of that, they're pretty easy to form. You just go down there and get your business license, right? Low startup costs. Pretty much the owner is going to pretty much have all decision making, the decision making capacity to do that.
Okay.
I'm a sole proprietor. I'm head honcho. I can make all the decisions I want to and everything.
Okay.
All the profits and everything, decision making is retained by the owner.
Okay.
All the profits are retained by the owner. Also, all the losses are also. Because you only have a business license, starting it up, it's pretty much easy to close the business down.
Okay.
So you can walk away. If it ain't working, you can shut it down.
Okay.
You don't have to go through this whole process of dissolving or anything like that. Just don't pay your renewal fee, or you just want to call that city hall or whatever. Mm-hmm. You have a lot of advantages with that. Okay. Okay. So that's just your basic sole proprietorship.
Okay.
So a lot of times, even when you file your taxes, this is done on your Schedule C on your tax return. Okay. So, but it is filed with your even though it's a business. So it is done with your personal taxes on a Schedule C. Okay, so that's one of the questions we're going to keep going back to it, because people come to me all the time, tax time, why do you need my business taxes done? I already did my personal. So that's how you set up. S-Corp, C-Corp, sole proprietor. Mm-hmm. Well, it's just me, I just got my business license. Well, we got to add that with your personal tax. We got to do an amendment. No, I already did that. But you don't understand. It has to be done this way. Okay. Right. And so that's one of the things I want people to be aware of. We'll go through all the different forms in regards to each entity, what you have set up, and let you know exactly how it needs to be done. So when we first we're talking about, that's sole proprietorship. Again, that's you just getting your basic business license. Okay. But you, like I said, you don't have any kind of double taxation. Right. And we talk about far as what's single taxation. Single taxation, that means just if you have made a profit, that means you sold 5, you have a cost of 3. You made a profit of 2, you're paying taxes on the 2. Okay. So that's just it, single taxation. Okay. Double taxation we'll go into with the C-Corps, and I'll explain how that goes. Because you just that one person, you're avoiding double taxation, you're just getting taxed one time on the profit of your business, right? Again, we start talking about profit, we're talking about sales or revenue minus expenses, that's the money you spend, equals your net income or your net profit. And that's what you'll pay taxes on, okay? Some of the disadvantages is you only have one owner. What's wrong with having one owner? You only have one set of eyes, one brain to help with decision making. So if you do right, great. If you don't have nobody kind of bounce ideas off of, you have to live with
one person to blame.
There you go. No.
One person can't say, well, they ain't tell me that. So yeah.
The thing, another major thing is you got unlimited liability. What we say about unlimited liability? Pretty much if there's an incident with that business, they can sue that business and also go to your personal assets. Because again, you don't have any kind of corporate veil, any other outside structure. The business is just created. So you have that liability set up. So we talk about the sole proprietorship. Okay. Now again, what's a way to mitigate that liability? Everybody don't raise their hand at one time. Buy some insurance. Buy some damn insurance. Right. And we done had that video. Check out Mr. Short Dollar. How much insurance to get and everything. But again, that'll mitigate it. But it doesn't still take away from the liability you had. Okay. Your insurance is just going to cover to what you covered for. Outside of that, if a person's trying to seek more than that and they're able to do that in court, you have that liability set up. Okay. So just keep in mind your unlimited liability. Another thing, it is difficult to raise capital. And the reason why it's difficult to raise capital because it's tied into you personally. Okay. So again, they're looking at both, really one, just you, not necessarily what the business doing and what you're doing. They're just looking at what you're doing and everything. So it's difficult to raise capital as a sole proprietor. right? Is just keep that in mind. And one key thing we'll talk about is too limited continuity, right? Because we talk about limited continuity. When you only got one owner, you understand it. In the video, what was the show we did? 10 things you need to ask yourself when make someone your business partner. When you're by yourself, and I share this with everybody all the time. Poochie sick. Poochie don't have PTO. I ain't got sick leave. I ain't got paid time off. So when things like that happen, the machine kind of stops and goes. Yeah, exactly. So you got to kind of be cognizant of all that kind of stuff when you're looking to go down that route of being a sole proprietor. You got all the rewards come to you, but you also have all the setbacks and failures and headaches that come along with it.
That's true.
So that's pretty much that with a sole proprietor. Like I said again, one key thing we were talking about from a tax standpoint, when the taxes are filed on a sole proprietorship, you have to take the actual income or net loss, whatever that's filed is reported on your personal income.
Okay.
On a Schedule C.
Okay.
And that's very, very important. I want you guys.
No, let me ask you a question though.
Talk to me.
When you file taxes, the money you make off the company, the business that you have, and let's say you work another job, are those funds tied together? And that's your net. Like if I work a part, like say my business is a day job, and I close at 9, I go work at Amazon from 10 to 4 in the morning, and I make $30,000-$40,000 that year with that, and my business makes another $40,000-$50,000. Just throwing out numbers. Are those two incomes put together when you file the taxes? When
you're saying I have a job and a business, yeah, it's put together, but it's on different lines on the schedule on the 1040.
Right. Well, that's what I'm saying. Like when you said we do the business as a sole proprietor, so my income from my part-time job and my income from my business is tied together, then that becomes my net.
Well, not your net, is going to be what we call your adjusted gross income.
Okay.
So you got your adjusted gross income, because what happened is, I won't go too deep, so we getting a 1040 class.
Okay, I'm just asking because somebody might want to,
No, they're separate things. So if you say one line, this is line 1 on your 1040 is always that's your wages. And I think that's line 6 or 7. I can't remember. That'll be from just say that'll be from your business.
Okay.
You have a bit, it could have a different line where it's coming from rental properties,
okay,
investment products and stuff like that.
Okay.
But at the end of the day, it's going to add to the bottom. Then you have a different section that tells how much taxes you be paid from that income.
Okay, so we'll go ahead.
Okay.
So this business income, I'll pay tax on that. Then my job income, I'll pay tax on that separate.
Still going to add, it's not going to be separate. They're going to add it at the very bottom.
Oh, okay.
But they have nothing to do with each other.
Okay.
We won't go out confused, man.
Okay.
That'll be a different show. We're going to do a 1040 show.
Okay. We'll do a 1040 later.
So moving what we talking about, the sole proprietorship, this is the next entity we're going to talk about is what a lot of people fall under. And this is what we call a single owner LLC. Okay. We know an LLC is a limited liability company. So we know theoretically what's the limited liability company. You got something usually registered with your state municipality. It's registered with that. And what we have when we set up as an LLC, C-Corp, S-Corp, any kind of entity like that, we register one time with the state. And then wherever you have a location in that particular state, then you actually got to get a business license.
Okay.
So you register with the state. And if you're got an office in Atlanta, you got an office in Decatur, an office in, Smyrna, you have 3 separate business licenses, but one LLC.
One LLC for the state.
One LLC, the register with the state, one tax ID number, but you got to get a business license wherever you have a physical location.
So that business license for each city you might have a location in?
Wherever you got a location.
Okay.
Except with that municipality.
Okay.
State one time, everywhere you got a physical location, you got to get a business license.
Okay.
All right, so we know that. So now we start going to what we're talking about being a single owner LLC, right?
Okay.
When you got a single owner LLC, theoretically, like I said, you have that limited liability. You have pretty much most of the same advantages that you have with the sole proprietorship, but you have that corporate veil.
Okay. You
have that limited liability, so you actually are protected now. You don't have to worry about the somebody be able to sue you. You have that veil. What's going on? A key thing, and this goes back to what we're talking about, the taxes. If you're a single owner LLC, you still have to file that on a Schedule C, just like you would if you're a sole proprietor.
Right. Okay.
That's one of the main questions I get asked a lot of times because people come, they're single on LLC, and they'll say, "Look, I need that question I just brought up. Excuse me, I need to get my business taxes done. I already did my personal."
Mm-hmm.
No, it has to be filed together if you're a single on the LLC.
Okay.
You know, because that's one of the first things I ask. You got a business? Yeah. How's it set up? The LLC, C-Corp, S-Corp. Once he tell me that you're a single on the LLC, I know from that point we got to amend your taxes if it's already done because we have to add that Schedule C to it.
Okay.
A lot of people, that's one of, probably one of the first educated moments we got to explain to folks, like, no, it's not done separate.
Well, let me ask you a question. I guess a single owner LLC, but then let's say you have partners then you still get an LLC, right? What LLC is that called?
We're going to go to that next.
Okay.
So we're going to do the single first, and then we'll go with the partnership.
Okay.
We'll go to that.
Okay.
So with the pros of that, like I say, it's pretty much the same thing that you have with a sole proprietorship, except now you had a corporate veil.
Okay.
Now you had a corporate veil. Still file the same way with the taxes. Still file the same way. The losses and everything distribute the same. The when we start talking about you have that corporate veil, so you don't have that unlimited liability, but it's the same concept. We start talking about the difficulty with the continuity.
Okay.
You get sick or something like that, hey man, it's on you.
Okay.
So the two major differences is you have the corporate veil. You have the corporate veil, but also got to keep in mind you still have to file the taxes the same way that you were if you were sole proprietor on a Schedule C.
Okay.
That's very, very important, guys. I want you guys to make sure y'all understand that, okay? You have to do that. But you got a corporate veil, we're doing it. Another key thing is the actual profit. You have to pay what we call self-employment taxes. Self-employment taxes is pretty much just with you look on your wage or your W-2, your Social Security and Medicare.
Okay.
That's one of the things you got to pay on that. Your Social Security and Medicare. And people, that's one day, and that's go when we start looking at different with the S-Corp and C-Corp. One thing is people want to try to do S-Corp, but I give my advice on the side with that. So that net profit that you made on that, you're still subject to paying self-employment taxes. That's your federal. You go to tax on your federal taxes. Most time with your job, you already getting taxes taken out.
Right.
But if you're doing this with this business, you got to pay your federal taxes, and you also got to pay the self-employment taxes, which is the Social Security, Medicare, FICA, whatever, with that. You have the option with any business. If you want to pay estimated taxes throughout the year or pay self-employment tax to do that, you have that option. You can actually guesstimate it off what you're making each month or each quarter, what you want to submit in and everything. You can do that. You do have that option. And that's with all of them.
Okay.
We're doing it. Could you incur penalties for not paying it? It depends on how much it is. But that's the thing of it is that you have that option. But I would always tell anybody in business, try to have some kind of, if you're making a profit each month, escrow at least 15% of your profit to a separate account, just in case at the end of the year your business does well and you have a tax liability, you have it set to the side. Okay. Now this, keeping in mind, if you don't have any kind of bookkeeper in place, no accounting skills, this, that, and that, you got to be on top of it because we just can't be working, guys.
Right.
When we said the difference between the business owner and the CEO, people like to throw that title around. I'm a CEO. CEOs moving strategy. Business owners, hell, they working.
Right.
So we start talking about you want to have these kind of titles, understand the concept behind it. You got to make sure that you moving the chess pieces to be able to, see these kind of things.
Okay.
So again, with that single owner LLC, it's pretty much the same as a sole proprietor. You have that protection of the LLC, that corporate veil, where you have that limited liability.
Okay.
Still file the same with that the sole proprietor be. You're still gonna have the setbacks in regards to the continuity. You have to pay the self-employment tax on the net income. Okay. If anybody got any questions, please tune in. Chime in anytime to ask you questions about that. Again tonight, we're talking about sole proprietorships, LLCs, S-Corps, C-Corps. I'll explain the pros and cons. We're going over the taxes and everything also.
Okay.
The third one is going what Lab was asking me earlier. What if you have a partnership? Two or more people go in together and they form an LLC. That's theoretically what we used to call partnerships. Okay, we're doing that. What'll happen is the same process to create the entity. You go to your particular state, get it registered. Same process we talk about where you got a physical location that you get it. The thing of it is with some of the pros of having a partnership, pretty much easy to establish. Very flexible form of business. And what I mean by flexible meaning that we have, of me and you forming an LLC together, multi-member LLC, we have the actual freedom to say how profits are going to be split, how losses are going to be split, how management is going to be split, all these kind of things. We have the flexibility of doing that if we're a multi-member LLC. Okay. We have to do that. When you register your business, you don't have to set all that. When you register with the state, you actually just set the members up, whoever you want to have listed on there. You create what's called an operating agreement between the different partners in the LLC, and you'll just say, okay, this is how we're gonna have everything set up. This is who maybe doing most of the managing, how profits are split, how losses are split, how we're gonna report this on taxes, getting signed, notarized, and everything. That's your operating agreement.
Okay.
You use that. That's your rule to say how you're gonna function your business, also how you're going to file your taxes also, right? Because it can be a situation where me and Lab go into business, Lab's going to contribute 70% of the capital, right? 7% of the capital, but he's only going to do 20% of the work. He's mostly going to be an investor, maybe give some advice here and there. I'm going to do majority of the work. Because I'm doing majority of the work, we may say that I'm going to get 60% of the profit. You're just looking at it from an investment standpoint. So you're putting in most of the money, but you're not getting most of the profit.
Okay.
And you can do that with a multi-member LLC. We have that flexibility to be able to do that. You actually have a chance to get a better opportunity to get funding, because now you got more people coming into it, and they can actually put up collateral and things like that. The bankers might be more attracted to a lender, or investors were doing that because you got more people come to the pot. If it's a good situation, good situation, do it. You also have a bigger pool of experience to dig from, as opposed to you just by yourself.
Right.
Because again, like I said before, I can just have you here as an investor to kind of maybe look over things and stuff like that, and I can give you a profit because you'll help me out. You'll make sure I don't have certain pitfalls or whatever. Another key thing is you still don't have that double taxation.
Okay.
We still got that whole thing how distributed. So how is it when we start talking about how the profits and losses are distributed? But remember what I said before, we have the flexibility to decide how we're going to do that. Okay. We'll start going in some of the cons of doing it. Partnerships, legally, you can sit here and decide, okay, which person may be. You can say a person is like, have the main liability, another person is restricted in their liability in regards to what's going on. You still have the corporate veil, but you still can also set up, in regards to how things, from a liability standpoint, would be set up and all that. Because again, legal acts, some things that one partner may do, still can come back and hunt everybody.
Oh, okay. So it can affect the whole company.
Exactly. Okay. Exactly doing that. Because like I said, the good part, I got all these people helping with the business, but the bad part is I also got, several people. Board member on 100 Black Men. I can do something and they'll still be reflective of exactly. Oh, okay. But that wasn't 100 did it. Deonte did.
Right.
It. Ain't Deonte part of it? Ain't Deonte a board member?
Right.
So those kind of things you got to be kind of cognizant of. It's very, very important. One of the things I'm trying to look through my notes so I make sure I don't miss anything. One thing, a lot of times you can actually, may not necessarily have the advantage of making decisions if a person isn't feeling something, because if me and Lab have already set in stone how we're going to make decisions, come to agreements, you lose that if you by yourself. You may say we got to have maybe 3/5 of everybody agreeing. We may have a situation where all or none, and you lose a lot of power. We'll be able to do that. Also, you have situations where deaths or somebody gets sick. How can you mitigate those particular things? Like we was in business together. Now you done died. Do you necessarily get my my share? Do my heirs get my share? Or do my other partner get it? your operating agreement can kind of fix a lot of things, and we also have things like insurance that can kind of mitigate it. We started talking about some of the disadvantages of things that can happen with it. We got several people.
Say, can my son come slide into my spot?
Yeah, or your son make hey, you dead.
Okay.
And, your son like, I want his money. Like,
right.
No, that's not how they goes
right.
and stuff. So some of them things have to be, if they're not set in stone, as opposed to just expected. A lot of times that stuff, it goes left. So you want to make sure you got as much covered in your operating agreement as possible. So then we started looking at it we're talking about multi-member LLCs or partnerships, right? That's any kind of LLC that you may have or more than one person. Now, here we go with the actual tax filing part. We have a multi-member LLC that's filed on the form 1065. 1065 cover partnerships.
Okay.
What happens is you'll file the 1065. Now on that 1065, you put the business information, tax ID, and you also list, how, based off your operating agreement, which you should have, how profits and losses are split. So you'll put that on there. This person gets, is it 50-50 with two people, 30-something% with three people, however you guys want to do it.
Okay.
You'll set that up on your 1065. What happens with the 1065, each member, as part of that LLC, gets what's called a K1. A K1 is what just reporting your distribution of the profit or loss of that particular business.
Okay.
If it was 90%, 10%, 50, whatever it is, you take that and you take the K1 to your personal taxes and file that along with it.
Okay.
The K1 is picked up on a Schedule E on with your 1040.
Okay.
Remember I said if you're a single owner or sole proprietor, it's picked up on your Schedule C.
Okay.
That K1 is picked up on your Schedule E. With that. And Schedule E is pretty much any kind of income losses from outside. You'll pick up rental properties, any kind of investment products, things from trust, all that's picked up on your Schedule E. Okay.
Let me ask a question.
Uh-huh.
When I file them taxes with my Schedule E and my K1 to put it with my personal taxes, with the losses, if I have any losses in that business, be deducted from those taxes from personal.
Well, that's what I'm saying. You're going to apply it.
Okay.
Remember I told you before that if you have a job, everything's added together and it should go to your adjusted gross.
Right.
Your adjusted gross income dictates, theoretically with tax filing, dictates how much each person will pay for taxes, depending on how they filing.
Okay.
Filing single, filing head of household, married, filing joint. Whatever that combined income from your job, whatever coming from the Schedule C, what's coming from the Schedule E,
right.
D, whatever coming from those particular things is totaled up, form your AGI, right? And then that number is looked at upon how much you should pay taxes from.
Okay. Profit and losses is all added up at the end.
All added up at the end.
All
Everything goes in. But again, this information from the K1s is taken to your Schedule E.
Okay.
Right? Schedule E is listing, and the only thing it's going to list is the income or loss that you have from outside in there. That's all it's listing on there. Like I said, I don't think it's going on there. Rental income, investment income, depending on what the investment is. Let me say that again, because some of them might pick Schedule B. But just keeping everything easy. That information is from the K1 for that multi-member LLC. File the form 1065. Each member gets distributed a K1. That K1 lists your profit or loss from your particular business.
Okay.
And then from that point, you'll file it from there.
Okay.
Now, again, remember what I said. Theoretically, whatever that is, you're still going to have to pay the actual self-employment taxes on it. So that means Social Security, Medicare, adding back to it. But if it's a loss, you're not going to do that, right? Okay. So just kind of keep that in mind, okay? So that's pretty much a multi-member LLC in a nutshell. Okay. Got any questions?
Nope.
All right. Now we're going to go to the next one. Well, before we go to the next one, again, guys, I'm Deonte Burden, a.k.a. Mr. Short Dollar himself. Tonight's show, we're talking about sole proprietorships, LLCs, C-Corps, S-Corps, all explained. We're talking about the pros and cons. Also talking about the taxes concerning them. We're streaming this on Mr. Short Dollar by Brain Cramp. On Mr. Short Dollar, we're streaming live right now on Facebook, YouTube, Instagram, TikTok, LinkedIn, and Twitter. The main hub is Mr. Short Dollar YouTube channel, where we have over 400 videos on the channel. Cover everything from business, from personal finance, business, entrepreneurship, and investing. We also deal in business operation, business management, business consulting, The easiest way to stay on top of all the information we have is go to the Mr. Short Dollar YouTube channel. That's where the hub is. Subscribe to the channel and make sure you hit the bell and get a notification each time we upload a new video. You got anything?
Nope.
Anybody got any questions?
No question.
Okay. The next one we're going to talk about is a C corporation. Okay. This is where we show things change a little bit. With the C corporation, still go through the same protocol. You will create the C corporation. You go to your particular state and form your corporation. Okay. You form your corporation, and what'll happen is usually most states, not all, I know in the state of Georgia, particularly, you'll form the C corporation, and then you have to register with your local newspaper. They have to run for, I think, 4 consecutive weeks to let people know that it's been registered. So it usually costs a little bit more than the LLC because you got to file for it'll run in that local paper, and that'd be your local paper being whatever your county paper is. And that's how that's set up. But you the same protocol, register with the state, go to the different municipalities, and get your business license. So you got a C-Corp, like say, what's C-Corp or common, McDonald's or whatever. Each McDonald's, even though they franchise, each McDonald's got to have a separate business license, each location that they set up in. But that corporation owns it, right? So it's still theoretically the same thing. We start talking about creating and implementing everything out, right? Some of the pros of having that is limited liability, a little easy to raise capital, ownership can be transferable, and with doing that, and that could be just you selling your stock or your capital, however you have it set up with that particular company. It can be transferred with doing that. You can get a large pool of people. You see these big companies, they having all these big shareholder meetings and things like that. So you have a large pool of expertise. The business is not a person. It's not owned. That corporation is by itself. It's by itself. So I get sick, I die, it's still supposed to go on. Because we definitely got to have some kind of structure set in place. We got to have some director, some officer in place, so everything's running. I might be the main owner, right? But again, I got people in place where it's already running on its own. Sorry, trying to make sure I don't lose track of things with my notes. That's one of the key things I think a lot of times people don't get with a C-Corp, because what you're looking at, how is that set up? You actually have to have some person, when you have a C-Corp, somebody got to be getting a wage. Somebody got to be getting a wage in a C-Corp, right? Somebody. When I say wage, guys, I'm talking about a W-2 employee. All right? We're going to come back to that in a second. Some of the disadvantages, when I just said setting up that whole entity and stuff, it can get quite expensive with doing that, because again, you're setting up a whole structure. That means shareholders typically might want to have your accountant. Not shareholders. I'm talking about officers, directors, board. Having actually, certain professions in. You might want to have your accountants, may have your attorneys, operations folks, and stuff like that. So again, you're gonna spend a little bit more money with doing that. You want to have some extensive record keeping. Make sure you're on top of everything with doing it. So that's one of the key, some of the, headaches with doing it. And you do enter what we call with double taxation. So before I start explaining double taxation, I want to explain something to everybody, because a lot of people lose this part. Guys, and I'm just saying this from a straight accountant, tax preparer standpoint. A lot of times people come and we'll look at their books and they'll say, we paid so much, well, not books, but just the information we filed in taxes. I paid so much in payroll. So I turn around and say, okay, y'all paid the payroll, especially you might say you paid yourself. They'll say they paid payroll, and what it is, they withdrew money from their business, their C-Corp. They took money out, and they were saying they paid themselves. This is where the problem comes up at. If you have the C-Corp, the business entity, and you pull money out, you have to report that money as income to you. Personally. It got to be reported to you personally. A lot of times people want to deduct the money they pulled out from themselves, but they never reported it. So you can't do that. Now, if you want to do that, we got to report the money that you picked up.
Okay.
And that's what happens. Doesn't happen a lot. You follow me, Larry?
I'm getting it.
Okay. So we start going to the whole point of double taxation. The reason why that the C-Corp is double taxed is because the C-Corp is a person.
Okay.
The LLCs and stuff like that pretty much was you. The C-Corp is his own person. It's filed on the form 1120. So that C-Corp, that's corporation, as opposed to differently what we look at the LLC is considered a flow through. So when you file the taxes on it, the LLC won't get a refund. Okay. Even if it's a multi-member LLC, it won't get a refund. It won't pay taxes. Once the K1s are distributed, you take that information, like you said before, it's going to your person. Exactly. Okay. The C-Corp, it can pay taxes or it can get a refund. Okay. It can. So that's what we start talking about. One part of the taxation. Then the actual shareholders, they receive dividends during the year. Those dividends are taxed.
So the C-Corp is a person,
technically. It's a person, technically.
Oh. Okay.
So it can, like I said, it's taxed. It can get a refund or it can pay taxes. And then the shareholders, they get any kind of distributions or dividends. That dividend, when it go back to your personal return, that can be taxed. Okay. So that's what theoretically we get the double taxation of. Okay. Okay. You see what I'm saying? The company can get it, and also anybody that's getting any kind of distribution can get it. Okay. So again, we use the form 1120 when we file the taxes on the C-Corp. That's filed. Any person that gets any kind of distributions from it, you usually get a 1099 DIV or 1099 deal. Okay. And that'll let you know what distribution you got. This is common. Just say if you guys got any kind of brokerage account, stock trade, stock trade. Is that one of them? Yeah, E-Trade, Ameritrade, whatever. Merrill Lynch account, whatever. Yeah. And you own some stocks or whatever. And yes, you just say your dividend distributions, tax time come, you get this 1099 DIV. And they're saying how much you got, distributions from dividends. Okay. And you'll take that information and file it with your taxes. Okay. You see what I'm saying? Right, I got it. And that's done on your schedule D with that. But you see what you're going back to capital because now you got that capital gains rate you haven't had from.
That's so again, 45% tax rate high, right?
Exactly. Capital but depending on how much you got invested and stuff like that, how much they're going to impact you. But again, that's when we start getting that double taxation. Okay. Piece of that, right? Right. So that's where that comes in. So the company doesn't necessarily pay taxes twice, but the company get taxed at one time, or like I say, they can pay tax or they can get a refund, but the distributions will be taxed. Okay. Right. So that's where we get that whole thing of double taxation coming up. Same thing, like I said before, the company has the option if they want to do estimated taxes during the year and everything. We're doing it. They can do it or not. It can benefit them, especially if you're going to be return a profit. But still, going back to what I was saying before, somebody in there should be getting a wage. What's a wage? Remember, guys, and I want you guys to really listen to what I'm about to tell you. You pulling money out of your account and giving it to you, that's a withdrawal. That's not a wage. That's what we call a draw or withdrawal. Okay. We start looking at, and that's that distribution dividend, which most people don't report on their taxes. The wages, you actually got somebody that's a W-2 employee, and you're filing, and you're sending no payroll taxes off to the IRS, the Department of Labor, Department of Revenue. You got somebody in there. Somebody's supposed to be getting a wage. Okay. It's supposed to be.
That's not necessarily the case, but they're supposed to be.
It's supposed to be.
So a lot of people make the mistake of just drawing the money, pulling money out of the account, putting it in their account, thinking that's a salary.
They'll say it's a salary, but the problem is you just doing it on one side. You saying that the lower the taxable amount that the company made as an expense, saying you did it, but you're not picking the income up on the other side. Okay. So if it's out, it got to be in somewhere else. Okay. Right. If I'm paying you, it's coming out of my company, but you got to pick it up in your personal return.
Right. So it can show on both taxes.
Exactly.
Okay.
Most of the time, people don't do that because it's theirs. Okay. So they're not necessarily looking at it. But that's one key thing, because a lot of times when people get audited and things like that, that's one of the things that don't come up. I mean, until then, they're like, hey, man, where's the wages? You know, you're the director. They're like, well, that's the money I took out to pay myself.
Right.
Well, where that on your personal?
Right, right.
And that's one of the biggest things people, you know, and I tell folks, you know, ain't no excuse for ignorance. That's why I really want to stress to people, when we looking on social media and these people are giving us business advice, it's cool. But you really got to make sure you getting business advice from credible people. Don't get a person's success confused with their expertise.
Right.
You see what I'm saying?
Right.
You know, I mean, my daddy can teach me how to fix on cars when I'm little. That don't technically make me a mechanic.
Right.
I can fix on cars.
Right.
But some people can tell you the exact, you know, specs for the vehicle with that, and you may know a lot from what you've learned, but that doesn't make you that.
Right.
And because you can balance a checkbook does not make you a damn accountant.
Right.
And because you actually learned a lot of laws, and I was about to say in prison, but you know, don't make you a damn attorney. What was that show to do there?
Right.
Man, we have so many people sitting there arguing with these damn police and stuff like that. And again, I'm always pro your rights, but you really don't know the law.
Right.
And you argue some of these things, like, look, get an expert. The problem is, I say a lot of times, especially with people like me, there are no barrier to entry. So you can start your business up without having the accountant, without having the attorney. And because there's no barrier to entry, you feel like you don't need it until something comes up. Yeah, get all this stuff done on the front end. Because I'm telling you, that accountant, that attorney, that architect, all these folks are a lot cheaper when they ain't nothing, they got to fix nothing, right? All right, Slick says, what about telling the people, the people telling us to see your house see your house to make money? What you mean by see your house? By people telling us to see your house to make money. Help me out with that, Slick. I ain't realized what you're saying about see your house to make money. I'm very, very funny about a lot of the gurus. And I feel like I'm kind of like one of them too.
Right.
But I always tell people, you can Google me, go on LinkedIn, you can call and we'll check, verify. Make sure you deal with credible people.
Right.
Because when you start going into some of these things that people give you, the things, only thing you need, they're not telling you all the pros and cons. Okay, cool. Slick ass, what about the people telling us to sell your house to make money? In regards to actually dealing with the interest, I'm gonna swing back. I'm gonna come back to that one. Because I don't really see what that tying up what we're talking about right now.
Come back to that one.
I come back to that, Rick. When we start looking at just these business entities, and people are saying, you know, it's easy to get your LLC, get your tax ID number, and dealing with it. Folks aren't telling you all the things that you have to deal with that come along with it. And that's why I say, please, please, please get proper consulting first. Because a lot of times these people that are telling you to do this because they have one set up and they done sold a couple of things and they have some success, they're telling you this how to do it, but that's not always the case.
Right.
I have conversations all the time with people that call me because somebody told them about a loophole. Somebody told them about something. I'm like, look, I ain't saying you're wrong. I'm saying I don't know.
Right.
I'll look it up. Most times it's not legitimate.
Okay.
You know, with a lot of things. So that kind of goes to what we're talking. Our last one they want to talk about, and that's the S-Corp or subchapter S-Corp. The biggest thing. I had to take my little cigar break. I'm sorry. With the S-Corp, I've seen a lot of videos with people forming S-Corps and doing certain things, and I think a lot of folks really don't understand the complexity. Sometimes we're dealing with an S-Corp.
Okay.
Especially we start talking about from a tax liability standpoint. So an S-Corp is what you call like a subchapter S corporation. What happened with a subchapter S? You go through the same protocol that you would if you form an actual C-Corp. You get it registered with the particular states you have with doing it. And the next step is you want to get taxed as a subchapter S corporation. So what you'll do, you'll file, God, I think it's 2553. Remember, you'll file with the IRS to be noted as, and forgive me if I'm saying the wrong form, but I think it's 2553. You'll file to get looked at as a subchapter S corporation.
Okay.
With IRS, and what that deems is the company be just like an LLC. It's a flow through entity.
Okay.
So it won't, you'll file the company separate, and then you'll take that K1 and report that income to the actual owner from the owners with your personal taxes.
Okay.
Everybody issue that. The key thing, one of the things is that you don't get double taxation because it's a flow through entity. A lot of owners can offset the income because when you take the distribution to your personal taxes, with doing it, you can actually offset, take it to your personal taxes. It can offset some of the income with that. One key thing, God, and I apologize, with the C-Corp, you don't have the flexibility with the C-Corp that you have with the LLC. Okay. If Lab comes in with 60% of investment, Lab got to take 6% of the profit.
Okay.
If Lab comes in, whatever you put in, that's where you're restricted with that.
Okay.
You have that flexibility with the LLC. You don't have that with a C-Corp.
Okay.
So, you don't have that with those restrictions.
Okay.
Now we start having people that actually invest and put capital in and stuff like that. That's how much if you want to sell ownership to them, whatever, but they only have that much of decision making power.
Okay.
Kind of like you see with Elon Musk, he had about a certain percentage of stake into Twitter. From that point, he had controlling, even though you said, what about 10, 15%, but that was enough for him to make majority because everybody else is spread out.
Yeah.
You see what I'm saying?
Right.
Was doing that. So that's all he had to acquire.
Everybody else got like 5,
there you
3
go.
or 4%, and he got the most percentage of the company.
Exactly.
He got the most of the 100%.
Exactly. From a share.
Spread out.
Exactly. Right. But you're restricted with your decision making and receiving the profit and losses with that with a C-Corp. So I forgot to mention that. We go back to fast forward to the LLC. The S corporation is still that flow through entity, right? But again, what a lot of people look at is, and this is what I've seen a lot of videos about, you don't have to pay the self-employment taxes on the net income on the S-Corp.
Okay.
Because I've seen tons of videos, they'll say the company, the actual, you're only set for paying the federal taxes on the net income.
Okay.
And people say, okay, you have a S corporation, the revenue is 5, the expenses are 3. We go back to our example. You only had to pay the taxes on the 2.
Okay.
And with the actual S-Corp, you only have to pay federal taxes. You don't have to pay the Social Security and Medicare.
Okay.
This is where everybody dropped the ball. The reason why is because you're supposed to have somebody getting a reasonable wage. That's a key word.
Come out all that FICA and stuff supposed to come out there.
Exactly.
Out there income automatically.
Exactly.
Right, okay.
So that 11-2, so you file in the form. So what happens is with an S corporation, it's filed on the form 1120S. That's filed. Each actual owner, whatever, it gets that K1. You take the K1, whatever that distribution of the loss of profit, that amount goes to your personal return, and each one that got that K1 from the S corporation, they're only going to pay taxes, federal taxes on that amount.
Okay.
You see what I'm saying, Lab? You're only going to pay federal tax. You don't have to pay the self-employment or Social Security and Medicare. People dropping the ball on what most of the time? Because they're not having a damn wage.
Right.
And this is why people are getting audited.
Okay.
You listen to these people on there that are gurus, they're not accountants, they're not business attorneys, or they're not equipped to know that. They're telling you like, hey man, you can do that, you can pay less in taxes. You still have to pay that. Somebody had to be getting a wage. Key word, the IRS states reasonable.
Right.
You can't be making $100,000 in your business. You paying somebody $1,000 a damn year.
Right.
It has to be a reasonable amount. What makes it reasonable? We can just go with a common sense rule, this, that, and that. But guys, it has to be something comparable with what you're making.
With the basic minimum wage, right?
Not minimum wage. No, we're talking about just say somebody's actually getting paid. When I say a basic wage, a reasonable wage, we're talking about you can't have this company making, let's say $100,000. You would think somebody making $100,000. Worst, the lowest, maybe $15,000,
Okay.
maybe $10,000. Somebody's getting paid, but you're reporting that wage to the IRS. You're paying the federal taxes. You're paying the Social Security, Medicare. You got money going to the Department of Labor, Department of Revenue. They're getting a check. They're a W-2 employee for that. So the self-employment taxes are getting taken out then. And so whatever netting from that, that's all that's actually getting reported, on your personal taxes.
Okay.
I've seen all these videos and they explain to people that, hey, you don't have to pay them but federal taxes, but you have to have somebody in that company. When people get audited and they're asking, where was the person that was getting that wage? I don't know. I'm telling you guys, that's what you have to be very, very careful, because again, people, and again, like I said, I'm doing the same thing, but I'm always going to direct you. I have every video that we post. You see that, we're talking about on Facebook and YouTube, where you can see, my LinkedIn is on there. You can Google me.
Right.
You want to make sure it ain't just about I'm knowing on a person, and I'm the only person who can tell you what's right. Look these people up. You got to be careful who you get information from.
Always.
You want to make sure that two things: they're credible and they're verifiable. You got to make sure that just because they have some success doing certain things and they bring people up, because I'm telling you, listen to all these damn celebrities and all these other people telling you what you can pay lower in taxes. I'm telling you, they can afford to get out of that damn audit. You can't.
Right.
So I'm just saying that you have to be very, very careful who you talking to. That money that you feel like I don't have to pay this accountant, I don't have to pay this consultant to do it, it'll be crumbs that you have to pay if you go around something get audited or something goes wrong. So that's a key component with that, because one of the things that I always want to go to people is, look, man, when you're trying to decide what kind of business you want to have set up, one of the first few things I always ask people, what's your current and what's your kind of estimated future living situation? You're married, single, divorced, going through a divorce, you don't know what's this, that, and that. We got to look at that. We got to look at your financial. You got money, don't got money, you got a lot of debt. All these kind of things weigh into play, especially when you start talking about bringing partners or investors in and stuff like that, because you might want to have a system set up, a structure set up that's going to protect you, also as well as your particular investors. Because if I'm looking to give you money, and you the people that actually have money, sustain money. Somebody might have hit the lottery, they got them a refund.
Right.
They feel like they're an investor and stuff like that. They usually lose their money pretty damn quick if they don't know how to actually skim and read people or look at certain things to understand what they need to look at before they make a sound investment, right? But they're going to actually scrutinize you like that. You see if you got a proper structure in place. So you're looking at it, how you're living, your financial situation, that being your income, your credit, things you have saved, and how much flexibility you want. Are you okay with losing? It happen. You seen that with that Steve Jobs, that time when he got popped out or whatever. Right. It happens a lot of times. People start businesses up and eventually they get pushed out. Your boy Famous Amos.
Right.
Pushed
out. Yeah.
It happens a lot, because you got to, figure out how much you want to be protected, how much we start talking about raising capital, what you got to do with certain things with that. And also what we talking about now in regards to those things with the taxes, when you sit there and say to yourself, well, look, Mr. Short just told me that I got to at least have somebody who's doing wages on that. It's one thing to say, okay, I'm okay with starting payroll and doing it. If you are late with that stuff, I'm telling you right now, that's a headache you don't want. That's a headache you don't want. If you're not going to be on top, once you start payroll taxes and you start sending them 941s out late to the IRS, Department of Revenue, Department of Labor, you're talking about subpoenas, penalties, and fees, and they will accrue much quicker than your income tax.
Right.
I'm telling you. So if you don't have a system or person in place that's going to stay on top of that payroll, with doing that, don't start it.
Right.
Don't start it. I don't care if the math shows that I can pay less in taxes. If I don't have a system in place to cover that, don't get payroll started.
Don't get the headache.
Don't get it. Is it theoretically the best thing to do? Yeah. Now again, you can do things to protect you. Hire somebody, get an ADP, get your payroll company. I get it, but you gotta understand if you start these particular entities, that being your S-Corp, C-Corp, especially that S-Corp, because you heard on the internet you don't have to pay federal taxes, and you don't get that payroll started. I'm telling you, it ain't gonna be a headache this year. It might not be a headache next year, but we know how the IRS roll. 3 years later, 2, 3, 4 years later, and you don't remember what the hell you did in 2018, 2019. You got an idea, but you can't remember what the hell you did. And again, we just said you got to have a system of record keeping in place. If you ain't got that set up, you like, oh man, I can't remember. You scrambling, man. I'm telling you,
headache.
THU. I'm serious.
Right.
I'm serious. So I want you guys to really take consideration. I'm always pro business. I'm always pro you guys being successful, getting everything set in place. But don't ever take for granted hiring people to help you get in the right position. Hiring folks, investing in yourselves, learn certain things. But let's be realistic. If you're trying to grow a business, get everything started, you only got 2 arms, 2 legs.
Right.
So like I said, you can get you. We talk about all the time. You can hit the link that I have for Fiverr. You can actually go on Upwork, get your accountant or attorney to draft some stuff out for you, look over contracts and stuff like that. You don't have to have a quote unquote accountant attorney on payroll. You can outsource them, but get those people in place to help you cover those things. Okay, so that's what I want to go over. We went over the pros and cons of the C-Corp, the sole proprietorship, LLC, multiple LLC, C-Corp, S-Corp. We went over the advantages of it, how to file, the taxes to file. So I hope we helped you guys out, and theoretically, how all of them go. So right now, I'm going to open up the floor. So if anybody got any questions, I'll answer the questions for you. Anybody got anything?
Yeah, one question. Marion said, what is incorporated? Is that part of one of those? Is that part of one of the S-Corp, the C-Corps? Incorporated. Incorporated just more so the verb.
Okay. That means you just register.
Okay.
So if you incorporate, it can be the C-Corp, the S-Corp. You get the LLC. That's just really more so the verb of doing it, getting registered with the state.
Okay.
So
so there's no tax difference on that.
No. You talking about incorporate?
Yeah, like.
No. Incorporate is just the verb. Okay. Going to get registered.
Okay.
We're doing it. Once the entity is set up, all those are the entities that you'll have.
So that's not another S-Corp. That's just the verb of the S-Corp or C-Corp.
The verb of going to get it registered.
Okay.
Of doing them. So people say, are you incorporated? Okay. What are you? Are you? Now that's just like what's your entity type? Just the verb. Are you incorporated? Yeah. What are you? I got an LLC. I got a C-Corp. Got an S-Corp. That's just, are you registered with the state? It's just more so the verb.
Okay.
And again, I'm glad that's a good question, because again, you start seeing this kind of jargon going out there. You're like, okay, that's a whole nother thing. It's not. It's just the verb.
Okay.
Of just of getting it set up. Now, I know Slick just asked me. Anybody else got another question? Slick asked you a question about what about the people telling you to sell your house to make money? I hope I'm answering you. Let me know, Slick, if I'm answering this right. Are you talking about in terms of what we were talking about tonight in regards to the business entity, or just?
I think she's talking about just in general. Just
in general, selling your house.
Yeah, to make money, like to sell it to, like to make a profit off of. Say you bought the house for $100,000, and right now it's for $400,000. They want you to sell it.
Well, you got the benefits of it because you got $250,000 if you're single, and I think $500,000 that you can actually buy it, sell it, and you don't have to pay any taxes on it. That's your primary.
Okay.
So we start going to this whole fix or flip thing. That's when things change.
Okay.
In regards to doing that, because again, you don't have those kind of provisions set up with doing it.
You should do a show about flipping stuff.
Okay. Yeah. Well, cool.
We'll get a show about flipping, not just real estate, but they flip a lot of things. Buying cars and selling them on lot and stuff like that. Like I might buy a used car from the auction, give me a little feel, put about 4 or 5 cars out there and sell them. all that kind of ins and out of that kind of stuff.
Yeah, and we're in a pretty much fix and flip society.
Right.
Everybody want to buy something, buy low,
Sell
high. Those are the damn advice I got.
What is it? Like the trading places.
Yeah.
Frozen concentrated orange juice.
Crazy. But as your question, Slick, it's beneficial to you when people say to do that. From we talking about it selling, we talking about doing real estate. When you outside of your primary, where you don't have to report the profits a lot, because again it'll be hedged with that. But once you go outside of your primary with doing it, you have those actually, you got to pay taxes on that particular income. If you don't have the proper structure, you don't actually even know, again, some of the complexities of dealing in real estate. I always say go find somebody for you. Get you an agent, get you some consulting with doing it. The thing that's probably getting me right now, what's going on with everybody's calling about people selling your house. You're like, man, they saying my house, I bought my house 10 years ago for 150, and they saying they can send me it's valued at 300,000. The issue come up is you got a 4-bedroom, 3-bath that's valued at 300,000. The problem is you sell the damn house, you got this profit. When you go out there on the damn market, you're gonna have to buy you a damn 2-bedroom,
Right.
1-bath,
Right.
at the same price.
That 4-bedroom is not. It's gonna be 600,000.
Yeah, because it's basic economics. Prices go up when the inventory goes down because it's more valuable. So because you done sold it, keep in mind you done sold it to actually go purchase into a smaller inventory.
Right.
So you don't have the options. It went up because your not because you in Green Acres, it's because the inventory is short.
Right.
So you done sold it, the inventory is still short,
mm-hmm.
and you got to go buy into this expensive inventory.
Right.
That's just how that is.
Supply and demand.
Exactly.
There's not enough 4-bedroom houses on the market, so of course your house is gonna go up, but the market is low, so that 2-bedroom is the same price that 4-bed.
Exactly.
That 4-bedroom used to be.
Exactly.
Right.
So you done sold something to end up a lot of times end up buying less.
Westside Misfits say you think the inflation gonna go down?
I don't know. It may correct itself and level up. It may correct itself and level up. The question was asked, does inflation to go down? It may correct. But see, here's the problem. When and that's how President Biden had a good point about that. I think we have factors a lot of times people can't control. Why car price? People income is going up, but also we got car prices going up. Why the hell car prices going up? Not necessarily because anything nobody did wrong. We got a chip shortage, so they're not selling cars. And again, what we got a small car inventory.
Right.
So we got a small car inventory. So the value of the car is going up. So a car you sit there and look at it. So that. Just say you get a car, even want to say something off the auction. You might have bought it 2 years ago for $2,000. That same little regular car at the auction now, $5,000, $6,000 used. Because why? The inventory
is low.
Exactly. So the prices are going up. So while people's income is increasing, you also got the cost of living, the cost of doing everything else going up in relation to it.
So the income is actually the same.
Yeah. So exactly. So we start talking about inflation, going down. Certain things are going to happen for that to happen. You got to get back on top because you only got one place over there in China. That's one place where they produce these damn chips.
And China shut down.
Exactly. So again, you're talking about certain other things that come into place for that to happen, and they don't have to come from things outside of what people in the White House or make decisions from.
And I think once and I think people need to understand that it's going to level out, but it's not going to level out at what it used to be. It's all gonna stay higher.
It may lab. It just depends because you start looking at how production and certain. It's just when you start looking at straight economics, it'd be amazing how one thing in one side of the world what they're producing affects everybody else. So a lot of times you have them ripples that come in, and it depends. So if they get to a point where we got a short here, and we get back on top, now we got a surplus, it can kind of level out and things can go back. But it just depends on what it is.
Well, I get what you're saying about the economic part, but I'm talking about the human greed factor is going to kick in at some point. It's just natural. I mean, they they got the inflation part, and then that's fine. Everything has gone up, but I doubt very seriously in my heart of hearts that it will go back down to the level it was before the inflation kicked in, because Now you're getting into profits. Now you're getting into
good. Well, everything relative. Because to your point, Lab, shit. Did you think, damn, let's say 20 years ago? Okay, Lab, just say you think about in the 80s.
Mhm.
What was mortgage rates in the 80s? It was over 10%, right? So I'm just
was only like 10 years.
You know,
I wasn't
I'm a
keeping up with the
finance
mortgage
guy.
rate back
Oh,
then.
I apologize, but I'm gonna give you my point. Like I'm gonna give you my point is that you look at rates are going back up, right? 10 years, we done went from 2-3%.
I was gonna say 3% in the last 5 years.
Prior to that, they was up 6, 7, 8%, right? My whole point of it is rates gonna go up and down. So even when you say, well, we're doing it, it's all relative. Because again, once rates go up because they're gonna increase, things get corrected, they're gonna may decrease. So again, those same things leveled up. So again, the margins, like what you just said, as far as money being made, if you selling something now for $5 and it costs you $1, you got a $4 profit. If the price, probably let me use a bigger number. You selling something for $10, and then you sell it for, and it costing you, let's say, $7. I'm making a $3 profit. Sold it for 10, cost me 7, made $3 profit. If you turn around, the market corrects, and I end up having to sell it for 7, but it's costing me $4, I'm still making what? $3 profit. And a lot of times those kind of corrections will happen.
Yeah, but okay. But
let's
talk about. I get what you're saying, but I'm just talking about the fact that I may be selling it for 10 and making it for 7 and getting a $3 profit, and then it goes back down. I'm not thinking about the $3 profit. I'm thinking, well, if I'm selling it for 7 and I'm making $3 profit and they bought it, I want to see if I can make a $5 profit. You get what I'm saying?
I get it, but
profits are always the end game.
I got you, but the hounds, a lot of them smart enough to understand that. They understand those corrections we're doing that and stuff like that. At the end of the day, when we look at it, you got to look at it from two sides: the consumer and the producer. Both of them got different angles,
right?
But it's funny that one of them situations now that you got people making great money out here, but they cause the lifestyle really ain't changed.
They say the medium rent will get up to $2,000 by summer.
But I go back what I'm saying. At the end of the day, if I can go from 80,000 to 100,000, or I go from 30,000 to 50,000, right? But my lifestyle's still the same. What the hell happened?
Right.
And that's one of the key components of when we talk about inflation, because everything going up, my cars going up, rent going up, food going up, and everything like that. I'm making more money, but I ain't seeing it.
Right.
So it's some kind of correction got to come into place with doing it. When that gonna happen, I don't know.
Okay.
Because like I said, you got no ripples and stuff. I hope I answered that question. Does anybody else got any questions?
No more questions.
No more questions? All right. Well, that was simple. That was simple. Guys, I want to put this out because me and DJ Lab got to talk about this. Probably once a week, I'm probably gonna have me a call-in show that I probably do from the crib. I just got to get all the equipment together to be able to do it. You have your Ask Mr. Dollar Hour. Yeah, y'all can just call in, ask questions, and we'll have it open up, give advice and stuff like that. So that'll be coming up probably the next couple of weeks. I just got to get everything in place. So, I got to get with Lab and just figure that out and stuff like that. So we'll have that going definitely sometime in the month of June. Okay. But again, I hope you guys enjoyed the show. We talked about sole proprietorship, LLCs, S-Corps, and C-Corps. I hope you enjoyed the information. You got any questions, anything, feel free to reach out. Make sure that you guys go to the Mr. Short Dollar YouTube channel, subscribe to the channel, share the information, and keep taking advantage of all the great information we got on Mr. Short Dollar. We got, I think we have like 4 or 5 grants came out this month. A ton more coming out that we're going to be, we don't make them. We're just introducing you guys. Next month, let you guys know we got a lot of other great information coming down the pipe as well. So again, I want to thank you guys from the bottom of my heart. All the love and support that you're giving me and the channel and everything, giving all my family at Misfits Media, Misfits Radio. Make sure you check out Misfits Media, Misfits Radio. Google it, subscribe to the YouTube channel, go to check out the different shows and all the different podcasts we have on the channel as well. Again, thanks. Reach out to us if you miss anything. We'll be back with Changing Lives next week. Love you guys. Be safe and talk with you soon.